Let me fix my hair.
All right, Shawn. So you have someone pre-approved. They shopped for homes. They found a home. They're under contract. You started their loan processing. Now, officially, at this point, what should these buyers not do? What are we avoiding?
So there's a lot of things that they shouldn't do, but I'll actually give you some practical real life examples that have happened to me.
Okay.
So throughout the years of me doing lending, I've had multiple different clients do things, even though I've told them not to do it. It's like opposite say, don't do this, and they do it anyways. So we had someone who was 2 weeks away from closing, and they figured, since that they got their approval, that they were okay to quit their job. And
Oh no.
they quit their job, did not tell me about it. And then when we went to go do our verification of employments for the final clear to close to be able to issue the final note, the employer notified us that they were no longer employed with that company because they quit.
Oh no.
So at that point, we had to deny the loan because they didn't have a job set up and we couldn't get any extensions. So it's very important. Do not change your employment situation during your process of buying your home. Don't do it.
Noted.
And here's another situation is, we all hear like, oh, buy this vehicle or buy this, or get 0% on this loan when you go buy this one thing.
Mm-hmm.
So a few years ago, when there was a lot of auto loans that were coming out at 0% interest rate, we had an individual go out and go buy a brand new $60,000 truck. It had a 0% interest rate. So they thought, since it had a 0% interest rate, they would be okay. They didn't tell us about it. Well, prior to closing, we do a soft credit pull to identify if there's any new debt that has been opened. We identified that they got a new loan for this brand new truck, even though it was at a 0% interest rate, 3 months, no payments you have to make. However, it had a $700 a month payment attached to it. And at that point, they no longer qualified. So unfortunately, they had to return the truck, pay a fee to return it, but then we were able to close on the house.
Okay, so you still were able to work on that.
They were not happy about it because they really wanted the truck. It's like, well, do you either live in the truck or live in your house?
Sure.
So it's always very important that when you're buying a home, do not open up any new credit, no credit cards, no car loans, nothing. If something is a necessity, talk to your loan officer first to get permission to do it. A lot of people go out before closing and they get really excited and they want to go buy furniture.
Mm-hmm.
Well, even if you go buy furniture, even if it's at a 0% interest rate, like their furniture row, we still have to count that debt to income or that payment against your debt to income. And if your numbers are tight, it could cause problems. Okay. So always talk to your loan officer. That's what this key is.
Rule number one.
Rule number one. Or one, not two. Rule number one.
This is a side question, but what if they want to make a large purchase with cash?
So there'll be situations where clients will also have, let's say they want to buy something cash. They're buying a property and they need a riding lawnmower or they need a tractor. Mm-hmm. They need something for that property and they have the money to do so. Even if it is cash, it's still very important to talk to your loan officer about making large cash purchases because a lot of times there's something called reserves. And if in your bank you have a giant amount of reserves that you have after closing, sometimes that's part of your approval. And if you no longer have reserves in your approval, sometimes you can lose that approval because you spent a whole bunch of money. So it's always a good idea to talk to your loan officer whenever you're spending a large amount of cash to make sure that doesn't change your approval standards.
Okay. And I assume you go through all of that with every client who comes through and some just forget.
Well, here's the thing. You can say it over the phone. You can send it to them a text message. You can put in an email. People just sometimes forget. Mm-hmm. And that's the hard part is you have to constantly remind them that during this process, you do not do anything without telling your loan officer, because if it's anything to do with credit, income, debts, or assets, if any of that changes through the loan approval process, you could lose the house. So it's always a good idea to talk to your loan officer anytime something were to change versus what you inputted on an application.
Very solid advice. So if any of you guys have any other questions about that or any other lending questions, please feel free to reach out to Shawn. Shawn, how can they get a hold of you?
A couple of different ways that you can do it. Signal flare.
That works for me every time.
You can give me a call or send me a text at 509-993-0856. Or you can visit my company website at creomortgage.com. That's CREO mortgage.com.
Okay. Thank you for doing.
Awesome. Thank you.
Sleep tight.